while everyone is fighting over the scraps in Austin and Miami. A few overlooked cities are quietly attracting billions in institutional capital. These aren't just small towns. These are ghost markets, undervalued, under the radar, and primed for a massive breakout by 2026. Most investors follow the crowd, but the real wealth is made by finding the trend before it hits the headlines. We've analyzed the latest migration patterns, corporate relocations, and infrastructure spending to find the gaps the big banks are keeping to themselves. In this video, we're revealing the top 3 hidden gem cities poised to explode by 2026. We'll break down the exact data points making these markets a goldmine and show you how to position your portfolio for maximum diversification before the peak. Let's dive in. Most people approach real estate the same way. They look at the headlines, they see where the cool people are moving, and then they buy. But here is the cold, hard truth. By the time a city is trending on a top 10 list, you're already too late. You aren't buying an undervalued asset. You're buying someone else's profit. You're fighting for crumbs against institutional hedge funds with billion-dollar war chests. You see a 4% cap rate and tell yourself it'll go up. But that's not investing. That's hoping. And hoping is a dangerous strategy when you're deploying 6 or 7 figures of capital. Think about it. When the experts start shouting about a market, the price has already peaked. You're entering at the top of the cycle. Your cash flow is squeezed. Your risk is maximized. While the crowd fights over the same 3 zip codes in Florida and Texas, the real wealth is being built in the shadows. The smart money isn't looking at where people are now. They are looking at where the infrastructure is moving next. If you keep following the herd, you'll keep buying at the peak. You'll be left holding the bag while the pros exit their positions. The window to find true asymmetric upside is closing. You need to stop looking at the map everyone else is using. Stop chasing the hype. If you're still looking at Austin or Miami, you're fighting for scraps in a saturated market. To find the real wins for 2026, we have to stop looking at where people asterisk are and start looking at where the money is asterisk moving. We call these ghost cities, not because they're empty, but because they're invisible to the average retail investor. We're analyzing 2 leading indicators, net migration and corporate capital expenditure. When big tech and government contracts move, the rents follow. Here are the 3 markets primed for an explosion. First up, Huntsville. To the untrained eye, it's just a quiet town in Alabama. To an investor, it's a goldmine. Why? Because it's the Rocket City. We're seeing a massive surge in high-paying federal and aerospace jobs. The key here is the price-to-rent ratio. Unlike the coasts, you can still acquire quality single-family homes here that cash flow from day one. If you use a tool like PropStream, you'll see the vacancy rates are plummeting while the median income is climbing. This is the classic, undervalued setup. Next, we head to the Midwest. Columbus, Ohio. Now, Columbus isn't a secret, but its asterisk scale asterisk is being underestimated. Intel is pouring billions into a new semiconductor mega site here. This isn't just a few hundred jobs. It's an entire ecosystem of suppliers and engineers moving into the region. When a trillion-dollar industry plants a flag in a mid-sized city, the rental demand for workforce housing spikes overnight. You want to look at B-class neighborhoods within a 20-minute commute of these developments. Finally, the sleeper hit, Greenville, South Carolina. Greenville offers the Sunbelt lifestyle without the Sunbelt price tag. We're seeing a specific trend here. Executive migration. Remote executives from the Northeast are fleeing the taxes and the cold. They're bringing New York and Boston salaries to a market that's still relatively affordable. This creates a massive opportunity for high-end long-term rentals or luxury short-term stays. Now, you have 2 ways to play this. If you want to hunt for specific deals and analyze the data yourself, PropStream is the only tool I recommend for finding off-market gems. But If you want the exposure to these diversified markets without the headache of being a landlord, Fundrise is the move. It lets you build a passive income stream by investing in institutional-grade assets without the full-time commitment. The window to buy in these markets before they peak in 2026 is closing. Now, finding these undervalued properties isn't a guessing game. You need the same data the pros use. That's where PropStream comes in. It lets you filter for motivated sellers and high-equity owners in these specific zip codes before the crowd arrives. But if you don't want the headache of managing a physical building, there's a faster way. Fundrise allows you to diversify into high-growth real estate portfolios with a fraction of the capital. The result? You stop chasing yesterday's peaks in Miami and start capturing tomorrow's growth. If you're ready to build a portfolio that actually scales, check the links in the description for both PropStream and Fundrise. Hit that subscribe button to stay ahead of the 2026 shift. Let's get that passive income rolling.